being able to own a home back again now someday. Something needs to be addressed about it. I don't know that the 50-year mortgage is the answer to it, because I think that's like putting a bandaid on a giant hemorrhage. And I don't know that will it make the payments a little bit lower for the same price house? Yeah, a little bit, maybe. Yeah. Is it better for the person in the long run?
Hell no.
There's no fucking way. Like
Yeah.
there's no way.
Your equity, all that stuff. It's just you're not
You're gonna
unlocking
pay.
anything.
It's a slower pay down.
Yeah.
You're paying more. So you're paying more interest. You're not paying your loan off any faster. So like, what are you really gaining by doing that?
Yeah. Just
And
that.
at the and who's making the money on that? The bank.
Yeah.
So like, I don't, empirically, I don't feel like that is a phenomenal solution to it. That's just my take on it.
Well, just your take, but then the reality too is that so this, like I said, 30-year, $500,000.
Yeah.
You're you're paying $1 million for that home. At the end of the day, 30 years on a 50-year on 500, you're
Yep.
paying like
More.
1.5.
More.
So you're
Well,
paying like for like three of the homes,
I don't know if it's
and
1.5, but
it's going to be close.
by the
I ran
numbers,
those
it's
numbers a
more.
little bit, like,
Sure.
and it's just
Sure.
like I don't know. That's because
There,
kind of like that's like
there's
it's
probably
insane.
there's a few schools of thought, because the other thing is, like, we're talking about a term of 30 years, right? So who do you know that's bought a home and been in that loan or that home for 30 years?
No, that's not the generation. No one.
That's the
Like,
other side of it, is like, okay, so that's not even probably likely.
you're not a fan. You're not gonna be putting it down anyone's throat.
I will. I'm not a fan on the front side, and I don't know. I got to put a little bit more thought into it. But I mean, knowing the little bit that I know or whatever about whatever it is the hell that I do, I just don't know that that's like it a great solution to the problem. Um, it's just kind of a sort of a sideways fix for it, you know. Um,
Well, isn't that what the government does? It's always sideways.
it's always some kind of
It's
dumb half-ass fix. Yeah, I know.
yeah.
Yeah,
Let's put a band-aid in
yeah,
and see what happens. If it,
yeah.
it blows up in our face. Oh well.
Yeah, it's not really a good like throw shit on the wall and see what sticks
Yeah.
kind of idea. But yeah, I don't know. I wouldn't say no. I'll never do a loan like that for somebody, But because sometimes you got to do what you got to do, in life, right? But I do feel like I really, if I had any kind of goal in life, it's like to somehow figure out how to address this problem for people, and problem for some other different better mechanism for for helping people achieve these types of things in life, but buying a home, and like a better way of doing it other than either the old way, something new and completely innovative and different. Um, because obviously, like, what's worked for a long time doesn't necessarily work right now, and I don't think that this is like that's the solution for it or whatever. I get it. They're just trying to, they're trying to figure out, the head of the FHFA, Bill Pulte, and the president and the administration is trying to figure out ways to, and props to them, it's trying to figure out ways to like at least help somehow, or stimulate or make something happen. And I get that. And I support that, but at what cost? And I don't think it's like a great long-term solution, really.
So, would you put someone in a 50-year mortgage if this was a scenario?
Okay.
So, first-time buyers,
Yeah.
they have a 650 credit score, don't have a whole lot of savings. Their payment, they want it about, say, 1,500.
Mm-hmm.
They're scared. We're going to say 1,500. That's no longer. I guess that's not real. Let's say 25. They want their payment to be 2,500.
Yeah.
If they did a 30-year, it's going to be, say, 3,000. With the 50, it's going to be the
2,500.
Yeah, say 2,500.
Yeah.
Their whole plan, they've told you, we're going to refinance. We're going to want to refinance. We're our jobs. We're supposed to get these raises and all this stuff, and these coming years.
Yeah.
So we plan to refinance it. We just want to use this product to get in.
Yes.
Would you recommend a 50-year if it was available.
Yes. Yes, I'm gonna throw an asterisk on it.
Okay.
So because yes, for a way to get you in there, in the door, in there, into the situation that you want to get into, and as long as it's safe, affordable for you, and all those things that you mentioned, yes. The asterisk is okay with the intent of refinancing in the future. So I get asked that all the time, like especially with when interest rates have been higher in the recent years, is like, how soon can I refinance? And the answer to that is like, if anybody ever tells you a direct like, oh, in this much time, they're lying to you. So they're
What?
lying, they're straight up, they're feeding you bullshit because there's no answer to that. I mean, there's a sort of a servicing rule answer to that, or like, oh, you could refinance after 6 months or after so many payments or something like that. Could. That's a basic, right? But will you be able to? The refinancing has like is an interest rate going to be where you need it to be when that in the next X amount of months or whatever?
Life
No, you don't
factors.
know that.
Yeah,
Nobody
life
knows that.
factors.
Your property value needs to go up. Interest needs to come down or whatever. So there's no way to answer that. Like truthfully answer that question is when can I refinance? Because there isn't an answer for it. It's like, well, when the circumstances arrive and the day comes when like that makes sense for you to do, because either there's a betterment in rate or you can like lower the loan term or whatever that is, that's when you'll be able to do it someday. Like that's when it is. No, nobody knows that. The other thing is going back to like whether I'd put somebody in the 50-year loan, like what you're talking about, is that, like you said, what if it's, nobody, the other thing is like hardly anybody stays in any one loan anymore, any one mortgage anymore, more than about 7 or 8 years at the most, let's say, or in a home in those cases. So some of this is just, well, we can overanalyze it and like pick it all to death, but the likelihood of you being maybe even still living in that house in the next decade is after the next decade is getting more and more rare nowadays.
Well, that's a thing too. So what if so if you look at it from that perspective, I think that the 50-year would be
Mm-hmm.
a like a good product for the
You,
affordability.
you're going to owe more on it after those 6 or 7 years or 2 years or 3 years when you go to refinance or whatever, because like I was saying, like more money goes to interest and less
Yeah.
to principal. So between the two loans, so like if you were to comparatively like, okay, a 30 versus a 50 after 3 years or 5 years, I'm selling or I'm going to refinance or whatever. If you had the 50-year loan, you're going to owe more. You borrow the same amount of money, but you're going to owe more. You're going to not have paid it down as far. You're going to owe more on the 50s. You're going to have less equity
Yeah, for sure.
when you get to whatever the hell that point is.
At the end of the day, it's you're saying no, but I think it's also a maybe.
Well, it's a
What's
definite maybe, yeah, for sure. Yeah.
but
I'm saying no. All I'm saying no. I don't mean to shit on the idea. It's just
no,
that,
you shit on it.
yeah. So if I'm gonna full dump on it, yeah, it's not a great solution, but it's something. It's something, and so somehow it's something. It's a little, maybe that's what it takes for somebody. It just makes the difference. Like you were saying, if it makes the difference between what I can afford, I can't qualify or I can't afford for a $3,000 a month payment, but I can afford a $2,500 one. Maybe that makes the difference. That bridges the gap or whatever.
Well, from my perspective, I just think that also like if it bridges the gap
Mhm.
and if they have that, hey, we're gonna refinance, these jobs are gonna change, our pay is gonna change, then that makes sense, you know.
Yeah.
But like you said, if you're going any further than that, like if you're going to be in there for a little bit longer, then it's like you're paying more, and that wouldn't make sense
Yes.
in essence. So ultimately, my from my perspective, I would only do it. I mean, we're gonna do what the client wants at the end of the day,
Yeah.
within reason. But
Within reason. Yeah. Sure.
we're gonna give them our expert advice
Right.
and suggestions, but ultimately it's going to come down to what they want to pay and what they want to do
Yeah.
based off their qualifications, what they can do. Um,
Well, we're in a society, we're in an era, a society, in a time right now where it's more like, well, what can how much can I afford to pay every month? You know,
yeah,
and it's the same thing. I mean, it's no different than if you're going to go out and rent an apartment or something like that. So like when you go apartment shopping, you know, like, well, what can I afford in rent? It's not so much as that's the probably one of the key main concerns, right? It's not like, well, I want this apartment or that one or a certain, you know, I want one that's huge or has whatever many bedrooms. A lot of things is like one of the main drivers is like, well, I can't afford more than this much in rent. So it's the same thing a lot of times when people buy cars and other things is like, well, I think I can afford this much in a payment, and that's it. So we're very payment driven. That's because that's how we can correlate it best. So I can tell somebody like by these like stats and numbers and all this stuff that's going to fly right over their head, like debt ratios and stuff like that, you know, what they could afford, but they know every day, people know like what they can afford, you know? And so and usually that's the approach that I take most of the time when I'm sitting down and pre-qualify somebody is like, they don't really know what other questions to ask other than there's two main questions is, you know, how much do I qualify for? And what's the
what's
interest
my
rate?
payment? Or
What's my interest rate? You know, and because they don't know what else to ask. And so yeah, so a lot of times, you know, well, you may be able to you may be able to qualify for a lot more than what you think you can afford, but that's not what you want, you know. So I'll usually counter the question to, okay, well, let's this has to do with putting somebody in the right like buying space, shopping in the right price range and different things like that is, well, what do you feel like you can afford? I'll
yeah,
know, you know, I'll work all the other numbers and things like that accordingly. But what do you feel like you can? What do you feel like is comfortable for you? You know how your life is. You know what you take home, what you do, what you whatever. So you tell me what you genuinely feel like you can afford, and we'll start there because then what we'll do is, okay, if this is what you feel like you can afford based on these parameters or whatever, these, you know, different loan programs or whatever, what might be the best thing for you, then that means if this is what you want to afford, then you're going to be in this certain, that will correspond to like this certain price range, let's say. And then this is important also when they're working with an agent, with a realtor, you know, that they know what houses to show them or like where to take them shopping and things like that, you know. So that's usually how I approach it with the basis point is, you know, what do they feel like they can afford? And then then we can work from there. If they're like, well, you know, I like these homes over these ones or whatever. Well, those are going to cost this much, you know, those are, you know, this is going to cost this much or whatever. And I feel like that's just a lot better approach, right? And then just like, well, the max you can totally afford is this qualifying, let's say, and you just stick them into something that may be like overextending them,